Everyone, welcome once again to another pre-week opening, top-down analysis, and market commentary. And before I comment, I would like to show some of the things I wanted to see quickly in my just concluded week's pre-week analysis. That is the video I made before this week open on levels I want to see as a draw on liquidity. So just in a few minutes. Just annotate that 6013. So that will be like the best of the best sell side potential draw on liquidity. The situation point. The low is 1.26651. I won't be outlining it, but this low to me is contentment for me. If price get to that low, and that will be all for this week. So this is the situation. Oh, we'll be going on post NFP release November 1st, 2024. Did we go up? For those following my analysis, for the past 3 weeks or even a month, we've been calling it lower. We've been. This was told to you. Anticipate this down close candle to give away. Did it give away? This. Did it give away? Did it? This must be absolutely random. Here is the video now. What I just showed you was actually the YouTube. I went to the YouTube to play. I recorded it, so I played the video of just concluded week stop down analysis on this playlist. I'll be adding it to the playlist. The name of the playlist is weekly commentary and pre-week analysis. That's the only playlist I have. So the video before this one on the playlist I updated, and you view it based on the newest. That was where I called all this level, and you can see this level was called to you on the European dollar 1.06013, and look how it delivered to it this week. So I'll be deleting them. That's why I just left them for this purpose. This level also was called to you last week. I said April, so you can see I even wrote delete in there. I'll be deleting it. That's the first thing I'll be doing, so I could save some time. The British pound also, I showed it in the video before this one. I called the level. Okay, I used daily time frame for that video. Let's see. I don't want to waste too much time. So this sell side, I called it 1.26130. Rewind the video is there in the recording I just did. And also this one I said I anticipated to give away. It's also in that video. I'll be deleting them so that I can just have direct focus. Also all these lows here, there's some levels, I think. Let's see. What I called sell side liquidity. Yes, delete. I'll be deleting them. I don't want much of all these. We've used them, so I want to make the chart clean. Also on dollar index, I mentioned a level. I think I used a weekly time frame. Yes. So this was the level, and it was drawn to. So for this, I'll just fade it and take out the annotation. So quickly, let's begin this week's analysis. I'll start from the European dollar. I'll try to make it as fast as possible. So as usual, to the monthly time frame, I won't spend too much time. So I'm still bearish. I'm not bullish on anything yet. I'll be giving you the conditions that can invalidate me being bullish. Okay. Price to draw to this low here, 1.04484. What has been written about that low? It's a low I've outlined, I think, on the very first analysis I began on this channel, I think October. I told you that's the low I'm looking for 2025 sell side liquidity. That is going into 2025 December / January, late November. This low should be the draw on liquidity. So I told you the macro perspective. By then we were here, October we're about here. So I told you that I want to see this low. So it's a very long, large distance. So that low now, we're very close to it right now. And if we take that low out and we see some animation in price, how far can we go? So look left, there's inefficiency here. It's a basic buy side imbalance, sell side inefficiency. That's it. So if we have an overzealous sell side delivery, that will be it. And also this level, what I'm reading, is a daily order block. Once we get there, we'll talk about it. So that's my drawn liquidity for the European dollar. So you watch the low of this candle at 1.06495. That low there, something's written about it. which I'll be talking about. It's actually May sell side liquidity. So there's not much to say there, but it's May sell side liquidity that was taken out. It was taken out, and I called it in the video before this one. I told you this level will be a drawn liquidity. So a proof of that is the weekly time frame. Here is it. So we'll see we trade below all those levels. So this is the 2025 sell side liquidity I told you just now about. Am I making a mistake? I have two of them. Wait. 2025 relative equals. Why not at the bottom? Yeah, I almost got confused. So this relative equals at 1.04955. It wasn't yet taken away. It's left, like Friday didn't do that. So and I think we should be doing that. If Sunday or Monday doesn't do that, then Tuesday should be able to do it. So quickly I'll be going to the lower time frame because that's where most of the talking will be. This red line you see here, this one, okay, you can see this way. This line is very little trend line, is 50% of just completed week's range. I take the range, total range, I divide it by 2 with the Fibonacci, then the midpoint, that's 50%. From that point higher is premium, that point is equilibrium. That's how I frame it. So if price should want to retrace, that's how I frame equilibrium and discount. And also watch this inefficiency here. Last week we mentioned this level, but they were not used. Price just opened and just started running on Sunday, Monday. This level, let me take this one so you can see. This level here, there's an inefficiency here. No, not that. There's an inefficiency, it says CB. So we'll have this level here. It's a what? Premium weekly CB. This should not be overlapped for high probability sell side delivery, coupled with the daily bearish order block and the monthly bearish immediate rebalance. These are my LLOD. LLOD means, for those who have been with me, would have repeated it. It's last line of defense. So that's what I'm saying. If that level fails, if price overlaps this level on a closure on a daily time frame, then it's probable that we might be seeing a deeper retracement or a reversal. That means we might not be offering sell side. But in as much as this inefficiency does not get overlapped on a higher time frame, which is the weekly, daily, and also 4-hour time frame, for high probability scenarios, we might still see lower prices. That is, we might still have a continuous sell side delivery. So until the level I'm trying, okay, that's the level. So let's go to the daily time frame. I told you I'll be quick about this one, but lower time frames is where we do most of the talking. So you know this is how they draw liquidity now. This level into this inefficiency. That's it now. How can we capitalize on that opportunity? Last week, it was Friday here. I said I want to see this coming week. Let me just show you how it was so you can just have an idea. This was how it was. This was Friday. I said I want to see this coming week. I want to gravitate into this. These levels were immediate rebalance, and this was an order block opening price. So this level, I was watching, should price want to retrace there? So if price retreats into there, then we'll be looking for short opportunities to sell short into the draw liquidity. Then Monday or Sunday, Monday will open. We didn't get there. We went a little bit up into this other block, but it wasn't so high enough for me. Tuesday didn't run upon this. Wednesday lower, Thursday lower, and Friday here it is. So it never retraced up. That was it. But I was able to see some setup. Hopefully if I have some time I can post on my YouTube some of the things I got. But if I don't have some time, but I was able, everything was met as a drawn liquidity. Now, how do we use the array for this coming week? That's what you want to know. I'll start by the closest proximity one. For high probability sell side delivery, like very high probability sell side delivery, this candle is a daily time frame, which is Friday's daily time frame. The midpoint of this candle is this line here at 1.05668. That line is Friday's week consequent encroachment. If bodies closes below here, that is on the higher time frame, which is the whole hourly 4-hour, the higher time frame, which is the 4-hour and daily time frame. If they all close below this weak consequent encroachment, then we'll see a very high probable sell side delivery. But look at all this time close candle, and after a large weak range is actually accomplished by a low or a small weak range or daily range. So you might see some small candles Monday and Tuesday. It might not be so large, or Wednesday we might be able to see something moving fast, and it can just be large and continue. It's possible, but generally if you see a quick drop, so that followed by little candles or a retracement, so I'm giving that opportunity. But if price just come in here, did not close here, then we'll be seeing sales at delivery very quickly. Okay, now this high here is Friday's high, so it's previous day's high. This buy side liquidity there at 1.0529 5929. Price might want to draw there. So if price draw there, remember this level I told you is that trend line on the weekly time frame, 50%. 1.6121. You can rewind it. I didn't call the level, but I spoke about it. This inefficiency here is very important for me. It's a daily CB, sell side imbalance, buy side inefficiency, short time premium. If this gets overlapped, then higher premium will be called for. Now you're saying, okay, if price then how do we know what if price? How will we know that price will be going up? This is how you know this level. If a higher time frame candle, which is on the 4-hour and daily time frame, if it closes above this candle that is overlapped, then we'll be seeing a higher premium retracement. And what is higher? This is above this 50% is a premium. One. This what is this level? This one level here I'm seeing. Yes, I'm gonna delete it. Those are the drawn liquidity. Someone might not see that, but I can see it easily. Here is also a CB, which is a premium CB. So here now, it's like ideal premium. Like if you want to go to premium, this level is ideal. We should stop here. That is for continuation. We can come in here for exceptional delivery. We'll stop in here or just this high. But if we overlap this inefficiency, then this inefficiency is the next one. Okay. This is an up close candle. Now, what if we overlap this inefficiency and overlap this? Then what will happen? That's where my last line of defense, how would I call it, approach comes into place. This low here is a monthly immediate rebalance on the monthly time frame. I thought what an immediate rebalance is. I think I did a good job teaching that in the video preceding this one for the weekly analysis, so you can watch it if you want to know what an immediate rebalance is. And this candle's low is a previous week's low. It's a previous week's low, and it's also a weekly order block low. Let's just go to the weekly time frame, so you can see it. It's a week low, like 2 weeks ago is the low. Initially it was the previous week, but now it will be 2 weeks ago, weekly low, order block low, and it's also what a daily order block main threshold. That is a bearish order block, the midpoint, like the midpoint of this up close candle. I told you about this up close, and the midpoint is about that same level. So what I say about that level, I said something which somebody might be trying to read into. I would talk about everything. So why are you just at the front? I don't want to pick you. It's this guy. Let me do this like this. So previous week, so this is the toughest warrior for me. Like, if there's a battle, there's like, let's just say you're playing a football, then defenders are the last defend. If the defenders were, overcome by striker or whoever gets it for order, then the keeper is the last hope, which means there's a probability of a goal if he's a very good player. Okay, let's say Ronaldo, you might just have a goal. Well, I don't care whatever is a fan, but Ronaldo's a very good player. So this is like the toughest warrior, and if this gets defeated, just like the defenders in a football, then price will really go up. Price will go up. So if this gets defeated, like price overlay it plus this inefficiency here, this inefficiency is a weekly one I showed you before. We keep dropping here. It's a premium week CB. This should not be overlapped. You see it. It should not. So if this gets overlapped, and even this should not. If you want to see sell side, this should not be overlapped for high HP means high probability. again. HP is high probability, LLO is last line of defense. So this should not be overlapped for high probability sell side delivery, coupled with the daily bearish order block and the monthly immediate rebalance. These are my last line of defense. Okay, so that's the catcher. If price just begin to retreat, then most price this get disrespected are coming up. That's it. But for now, this 50% of the weekly range, this CV, this high, the weak consequent encouragement, those should be enough to keep price lower if price is retreating for a short side delivery. But price could just open through to this consequent encouragement and keep going down. So you have to allow for that also. And this if you could look well, there's a dotted line here. You can see that. Let me just, I like to make my things almost invisible, because the more visible it is, the more annoying it becomes. This is also Thursday's till consequent encouragement. So once price begins to trade lower, if body begins to close here, like on the daily time frame and on a 4-hour time frame, on a 4-hour basis or a daily time frame basis, then there's a high probability for a sell side continuation. So if you see Monday or Tuesday closing below 1.05129 on a 4-hour or daily time frame basis, not on a 1 minute basis, on a 4-hour or daily time frame basis, then sell side delivery might be positive, and the first low will be attacking is this Thursday's low at 1.04962. Then there's a low just about that level, which I talked about. So on the 4-hour time frame, so you can drop your questions. Also feel free to communicate your thoughts, subscribe for more. So once I drop a video, you won't be, oh, I forgot. No, you can easily just get notified, and that's it. So this way, the levels we framed all this level. So you can see this again. This is that level. Remember, the 50% of previous week's range. It's almost the same price. Let me make this not visible on the daily time frame since we've discussed about it. Not daily, hourly. It's almost the same level. This 2 up close candle with this fair value gap, which is a change in state of delivery, makes it a bearish order block. These 2 up close candle consecutively. So this order block, it's an order block. I didn't even write about it. The opening price there at 1.06131. It's an order block. So it's a 4-hour H4. That means 4-hour bearish order block. We use minus for bearish and plus for bullish. Bearish order block opening price. So the opening price of this candle, that's it. You can look at the top left corner. I'm talking about open, high, or low. So the opening price is that level at 1.06131. And it's also what? Essentially, I think it should remain there. No. Yeah, open. So it's also essentially the 50% level I showed you on the daily time frame, which I just made invisible on the 4-hour time frame. So they are almost the same level. And one thing I've thought, well, maybe not extensively, but I've always emphasized it, that once you see multiple stacking of a PD array, it does what? It makes it high. It makes that level very strong. Look at this inefficiency I told you on the daily. 60 minutes CB. This will be talking about 60 minutes time frame. But that inefficiency, also the midpoint, is almost the same point as this array. So this level is very strong. Like, for high probability sell side delivery, this is the last line of defense. But for flexibility, we have our last line of defense, I think, about this level, if I'm not making a mistake. Yes, that level. But for high probability, like very high probability sell side delivery, this is your last line of defense. Once this gets overlapped, then it might run this high. If it doesn't reject immediately, you just might be looking for longs, or you sit still, because it's not so high probable to go down. To the 60-minute time frame, you can see the inefficiency. This is the CB here. So the midpoint of that inefficiency, let me draw a middle line. Yes, this dotted line is the midpoint. You can see the midpoint of the inefficiency. That's an array. This 50% consequent encroachment of the 50% of the weekly range. This just completed a week. The opening price of that 4-hour order block. Those are 3 arrays stacked closely, so it should be very strong. So should price overcome this consequent encroachment of Friday, which I told you, remember? So I used to transpose all my level from the higher time frame to the lower time frame, and also this high, which is Friday's high, previous day's high. If all those levels get overcome, price might want to come here. But if this begins to fail and it overlaps this, then high probability lessness it now becomes a what? A low probability sell side delivery. So that is all you need. And I can see this low is not taken out yet. This low also is not taken out. So this low to me is so much like it's enticing. It's like, oh, this is a strong support. Price came in here, it came out. No, there's no. That's a flawed logic. Price should want to eat up into the sell side. The sell stops here. That's the stop losses and sell side liquidity line there. That's that for the European dollar. I don't think there's much on the 15 minutes time frame to say. Not so much. Not so much. I don't want to give too much complications. This level were used during the week, and I don't want to give too much complications. So you can feel free to subscribe. Once again, give it a thumbs up if it resonates well with you, and also ask your questions if you have doubts and you need clarification on anything. Kindly do that. Okay. So this is the British pound, and I'll do the same thing here. So last week, you saw the precision, so you can also encourage me. You can encourage me, give me a thumbs up, and whatever it is, how do I do, whatever question you have. So this is the monthly time frame on the British pound. This array, what's this middle line? No, I'm taking the middle line off. It makes it more okay. So this is a CB, which would have been a bullish inversion fair value gap as it was overlapped, but it failed. Like it was overlapped to the downside again. This was an inefficiency, this one here. So when it fails to send price higher, it means order flow has been shifted. That's how I use it. Okay, much like this premium array here. I don't want to talk too much of things that are not necessary, but this failed. Normally it should have been used as like a support to send price higher. As it closed, this should be here, the next should open and go higher, but it failed, which means it's tipping its hands. I'll be going down. That's what it's telling you. Now, going down to where? This array, I made it faint. It's an array we've been calling for a long time. It's a what? What is the array? We'll go right into it. Monthly and weekly bullish order block open. I put delete here so I can delete it as immediately I talk about it. What we said about it is, if this give way, then we are in a bearish quarterly shift long term. And you can see that it gave way. Price has gone below it on the weekly time frame, since it's a weekly level, so that somebody can see that before I delete it. You can see this consecutive down close candle. So I was watching it, and you can see this week closed below it. So that was like a disrespect of that array, which means the array fails, and what it fails to send price higher, which can be used as an inversion, telling you, but I won't talk about inversion here. So I'm deleting it for clarity purpose. Now this low here at 1.155, this low is what? 6155. Okay, this low has been traded below, so it's no more. I'm not more looking at this low as a drawn liquidity. But on the daily time frame, we'll see much. But what I want to just say on the monthly time frame was that inefficiency that was disrespected, which you all see. Now, this is drawn liquidity. This inefficiency is a discount inefficiency. What is this? Okay, this is very important. Let me talk about it. So we'll go to the 3 months time frame. Like, oh, 3 months, yes. Like when I was doing this time frame, literally I used even the 12 month, that is the 1 year time frame, so I can just have information. That's the work that goes into this video. You see, that was 1 hour long. I did like so this is the 3 months CB inefficiency. So I drew that out, okay, and I'm watching the midpoint of that inefficiency, and I'll be going to lower time frame and be watching, did the body close below the midpoint multiple times? If that is so, then that is making me know that we might likely go lower, because if we'll be going higher, the midpoint of this inefficiency, which is the consequent encroachment, is the midpoint of an inefficiency, it should support price and send it higher with this down close candle here. These are all down close candle too. So this could have been like, if it goes higher, this could have been an order block, but the midpoint now, does it get disrespected? And this low also. Now, what do I say about it? 3 months CB. Okay, let's see, looking at it here with me. 3 months CB. If its consequent encroachment, that's the midpoint, gets overlapped multiple times on the lower higher time frame plus. When I say lower higher time frame plus, normally when I say higher time frame, it's daily and 4 hour. But if I say lower higher time frame plus, in this case from a 3-month time frame, it means on the monthly and weekly. We can include the daily, but monthly and weekly. If the bodies are closing below that, that is plus. If November, that is by the end of November, if you close below here, note that's not like it must do that. That's just my like it must do that. It's just my speculations. But if November closes below here, then we might continue sell side delivery. Okay, that's December going to January 2025. So it's not like it must, but if it does that, this will be happening. So back to the monthly time frame. So I just did a very serious job of taking out the question that might arise by somebody saying, what's that level? So that line is the midpoint of that inefficiency I just spoke about. What are the draw on liquidity? This inefficiency here. Let me take it out on the monthly time frame so I can tell you what I want to see. The monthly time frame, this inefficiency here, that's what a monthly, this BC here, I want to tell you what it is. It's a monthly discount BC. It is drawn on liquidity. DOL is drawn on liquidity. If this gets overlapped to the downside, note I didn't say upside, downside, then its swing low at 1.023373 becomes the next potential draw on liquidity. This is the swing low. The low, yes, this is what is this something? What level did I just mention? 7329. Okay, I've seen what I'm talking about. This is a swing low here. So if this inefficiency gets overlapped by a candle to the downside, this low normally it will be taken out, but it further amplifies that this low might want to get taken out at 1.0373. That's the level inside here. 1.2. I didn't edit it. It should be 1.20. So it should be 0 here, not 3. So these are some of the errors that are happening when I'm trying to. So 1.2073. So that's this low here. At 1.2073. Look up here. OHLs here. Open high, low, and close. So those are the drawn liquidity. But also this low here might be, a drawn liquidity for price. Monthly sell side liquidity at 1.22997. Weekly time frame. So here's on the weekly time frame. Yeah, very important. This level. Look at all my top-down analysis since price has been here in October. We've been doing top-down analysis. I've been telling you, if anything should happen that this level gets overlaid by a body, we are going to what? Fall aggressively lower. This is it. So it was like a balanced price range. It was a last line of defense for the bulls. If overlapped to the downside, then the British pound tanks lower. And what did you see? It gets overlapped. And what happened? Bounced up? Nope. Lower. You can see that. So this level, I've been calling it, if not for 3 weeks, that this level is the last, like, if it fails, man, plus look at how this swing low was taken out. That was a shift in market structure. Like, look at that. If this level failed, it didn't fail at this week. But if it failed, which, like, look how it went lower. How many candles as large as this one? Probably this one, but not as large as this one. You can see that. And I told you that what? On the British pound, I'm anticipating what? A large range down close candle. I told you that. It's larger than that of the European dollar here. Look at the monthly time frame for the British pound. I told you I want to see why. Because the European dollar has been going low, and this should want to catch up. It should want to catch up with the European dollar. You can see that. And what do you say? Large range candle here. So it's something I've been talking about long ago. So that's the benefit of following me for a while. And this level is still that monthly time frame. Yes, the consequent encroachment of that 3 month array, this is it. We can see that this month also closed below it. So I'll be taking that 3 month array, which is this. Let me just, so you can just remember. You can see that one in green I did. So I'll take it out. No, not the medium. I want to take it out of this time frame completely. Let it be where it needs to be. So you can give me a thumbs up, you can subscribe for more. And now here is I don't get any pay by doing that. It's just encouraging me. So this inefficiency now, I'm watching it. Just like I told you about this, I want to tell you what I want to say about this inefficiency. Let me see. So it's a weekly inefficiency, which is a weekly overlapped BC, buy side imbalance, sell side inefficiency. That's an up close inefficiency. So it has been overlapped on the weekly time frame. So it will now become a potential bearish inversion fair value gap. That means it can be treated as a potential resistance. Let me just explain it. It's not like this is a resistance, but for you to understand, it will be like a resistance to send price higher. That's a bearish inversion fair value gap. That's what IFVG means. The presence of lots of back and forth on in its consequent encroachment, that's the midpoint on the forward time frame, which we'll be going to very quickly now, should resist higher premium retracement for high probability sell side delivery. What I just mean is that the midpoint here, when we go to the forward time frame, you see some up close candle. That should be able to act like a bearish order block to prevent price, like this should be like a strong defender to prevent this guy from entering in, like a player from scoring a goal. So it should be able to defend price to be able to continue the sell side delivery. Other words, if it gives way, then premium will be going back into, which I don't think that will be the case for now. And also this level is a discount level, a monthly drawn liquidity. I didn't talk about it. Let me just show you. You should see it here. Okay, I did so, and I told you if it gets taken out, that swing low. Oh, I did so. I almost forgot. I did so. So that inefficiency, if we see overzealous price moves, then we'll be going there to that inefficiency. And also this monthly sell side liquidity here, which I think is something for this week to do that is a little bit, it's possible, but there might be a retracement, so I'm not demanding it. But the easiest is you can see this inefficiency here, and I think this low has been taken out. So to me, there's no much low here. This other fair value gap has been overlapped. So this inefficiency is the major thing I'm looking at, the high at 1.25004. So let's go to daily time frame as I wrap it up. Remember, you can ask your question, you can communicate your doubt. So here I'm hearing some noise in the background. You can just ignore that, by the way. So this sell side liquidity has been taken out, like I said. Now that in an inversion fair value gap, I hope this is it. Yes, it's it. So that's why I'm watching. If price start to retrace now, I'm watching it. This low here, it was used as an immediate rebalance. So this is an immediate rebalance. Maybe I'll talk about it in just 30 seconds. Immediate rebalance is an array which is preceded by another candle that has the same direction as it. So this candle now, it closes, this candle closes. The next one now, normally you want to see separation like this one closes, this one closes. The next one couldn't come to this low. This is an inefficiency. But this array closes, this one closes. So this next one comes right to the low of this one and touches it. It's like a bounce, a springboard. It should immediately send price lower. And something about an immediate rebalance, I said, I don't want it to get touched the second time. Why? If it gets touched the second time, look at it, okay. Weekly used bearish immediate rebalance. So I even, like, these are things I already did so I can remember them. Weekly bearish immediate rebalance. If it's a real bearish immediate rebalance, like if it's for real, like bro, are you for real? If this is a real, focus on the education phase. If this is a real bearish immediate rebalance, what the hell? Tongue twister. If this is a real bearish immediate rebalance, it shouldn't get a second repricing. Why? A second repricing of a high probable array, like a very strong PD array. There are three of them I know. We'll have the bearish immediate rebalance, we'll have the institutional order flow entry due, and the balanced price range. They are strong arrays. So if those arrays are getting, well, the balanced price range can get multiple trading too because it's an inefficiency. I've discussed about that in a video, I think top-down analysis. You can go and find that out. I can't remember the video. If you want the video, you can just comment. I can literally just check out and get it out for you. If I have the time, I can do that, but it will be better for you to check it out yourself. But if you still want me to do it, if I can do it, I will. But those three arrays I mentioned are very strong. But I'm focusing on the two array, which is the bearish immediate rebalance and the institutional order flow entry due. If they get a second touch, I don't want that. Institutional order flow entry due is a partial entry into an inefficiency. As an inefficiency will not get completely overlapped to just enter inside less than the 50% or just the 50%, most likely the lower 25% entry send price lower. So immediately, if it gets second touch, it reduces the probability. Like it means, oh, I don't think you are for real, bro. You're just joking. So if anything happens, it comes touch the second time, then this becomes low probability. It can still go lower, but it just becomes that. I'm telling you that I don't want price to come to this level. That's what I'm telling you directly. It can, but for high probability sell side delivery, it shouldn't. And I told you on the British pound, we'll see large range down close candle. From here, did you see any up close candle throughout this week, Friday? No. Now look at the European dollar. There was an up close candle here. Do you see that? You see that? It took out Thursday's high. Was Thursday's high taken out on the British pound? No. Which means the European dollar has the probability to see more retracement now. It was initially on the British pound, but now the British pound want to catch up to what the European dollar has done over the months and weeks. So here's just a nice view. You can see. Let me try. What's wrong with mine? Yeah. So if you pull a fib from this low, okay. Let me just do it. I don't want to do this. It's just so much of time for me, but I talked about it already. So if you pull a fib from this low and you draw it to this high, the 75% level, this is 50%, 75% level is this level I outline here in a very little dot. Someone might be like, what's that dot here? I'll talk about it right now. So this dot here is 75%. So that swing projection I just drew, the lower 25%, which is like the 75% of the projection of the swing, I love body closure to occur here this coming week. So if you see body closing below 1.25834 on a daily time frame, 1.25834, then it becomes a plus, like it supercharges sell side delivery for price to run into this inefficiency, because there's no much of sell side liquidity. If you look there, all this low has been taken out. So the next is all this inefficiency. There's a low here before this inefficiency, but to me, I think price should want to run into this inefficiency quickly. So, and also I told you about this level, this up close candle, that it should give away. I don't know if I spoke about it. I told you in that video which I did before before this analysis, that it should give way, and you could see how it give way coupled with this inefficiency. So to the 4-hour time frame, I believe you understand what I just spoke here. Remember, this is the weekly bearish inversion favorable gap. As I go to the 4-hour time frame, you will see those up close candle that I talk about, which should be like what should defend price from just misbehaving and going high. Because if it goes high, it's like a misbehavior, but it's tradable. So these are the up close candle I'm talking about. You can rewind the video, I won't do that for you. Weekly overlapped BC. So on the 4-hour time frame, the presence of this up close candle should resist towards higher premium retracement. So these are the up close candle. Look at these backs and forth, like this is a balanced price range. Not the real balanced price range, but this range is like price has delivered up, down, down, up, or like there's no inefficiency there. It's balanced. So it is like there's no reason why, to me, this up here into this inefficiency is enough for high priority sell side delivery. So this is the array it was used here. As I said, I don't want to get a secondary pricing, but then given a chance for any kind of situation, there can be news. I've not checked the economic calendar. I don't know if FOMC is this week. I don't know. Well, I think it should be this week. I don't know. I've not checked it. I might do that towards the end of the video. This buy side liquidity here, I outline a level here in blue. So that's buy side liquidity. It'd be better to be left intact. That is, it should not be swept. It should not be purged. It should not be traded to 1.27206 for high probability sell side delivery. But I'm allowing a sweep. But I said, but an immediate rejection downward. That is, I don't want this level to come 1.2720203. I don't want price to reach here. But if it reaches there, this is the only condition, an immediate rejection to the downside. What I'm saying is, if price should want to trade, if price opens anything retracing here, which I don't want to see too much deep, to me this low is enough. But if it retraces as far as here, what I want to see immediately, I want to see it not like in that day to reject, but on the lower time frame, and should have significant visibility on a higher time frame, like even the 1 hour, 60 minutes, and 4 hour. I want to see price reject not keep going and not reject a little bit, then do this. No, it should reject and just, it might reject a little bit, but just should not come in here again. So that's the only condition. If that level should get a trade to, that's the only condition. So this is not a pattern, I'm just trying to explain something. So that's it. But for main scenarios, this might not see so much retracement like the European dollar, but you can see here, this the opening price for this candle, closing, this is an indecisive candle, but this is an up close candle here. Why am I not using this one? I've told you why. I look at this as a mother because it encapsulates this. So this covers this. This is inside of the range of this up close candle. So this is one I'll be looking at an order block. Okay, that's an order block. This is a week. It's treated as an inefficiency. So the midpoint of this week also, I'll be watching that. I didn't say that. Let me look at the week of Friday. Does it say week there? It's very little, but it could be. It's worthwhile to talk about. It's very little. I won't. Let me see. I can just eyeball it and place it right here. But we're using the week I spoke about on the 4-hour time frame. That's better to me. Remember, encourage me, give me a thumbs up, subscribe for more, and also ask your questions for further clarifications. I love to answer questions. So this is the week I just drew just now. I'll be using the 4-hour one. This is good, but I actually don't like it so much, so I'll just let it be on that daily time frame only. But I'll be using this candles week. It has a long week, so the longer the week, the better it is. The high of the week is 973. The opening price is 525. 973, 525. So for those wondering how do I get those weekdays, I'm doing it live here now. So I told you it's 525 and 973. I'm just calling it. So the midpoint, those are the last 3 digits. If you look here, you see it OHCL. So the high and the opening price for a down close candle, the week. The midpoint here is this 0.5 level at 1.26749. So I will now take a horizontal line, put it here. And I give it a name, which is a what? 4-hour. I used to use H for what? 4. Come on, what's going on? 4-hour week. Consequence encouragement. So body closure. What's wrong with my typing? Below here is a signature I'll love to see. So if I see body closure, in other words, I don't want body to be closing above this consequence encouragement at 1.26749. I want body to do what? To close actually at, it can close at it. So let me include that, at or below here. The best is below, but always. So body closure at or below here. At or below here. So that's the flexibility there. So if body is closing at or below here, and if you look left, I won't be doing that. You can do the same thing I did. Divide this other block into 2. Let me just do a rough draft. I'll be using the week here. I told you when I'll be using the week and when I'll be using the bodies. So if you divide this other block into 2, you can see the mean threshold of the other block is about here. But let's just use the body and see if we can get an overlapping. The body closing price and the body here. So the main threshold of the other block is about this level. The main threshold. So I'm watching that level also. You can also put it on your chart. Well, I don't want too much, but 800, that's the level. So I'll just write it inside here. The other block main threshold at 1.26800. So because I don't want that line on my chart. So they'll have the bearish or block main threshold at 1.26800. So it should help send price lower. So should we exceed that consequent encroachment? So let me just make it this way. Should price exceed, what's going on with my keyboard, the 4-hour week? So like how far beyond the 4-hour week can price go if price exceed that 4-hour week? So this is how far price can trade. So if price should exceed this 4-hour week consequent encroachment that I just showed you, then if you want to know how deep can price go, then that's this main threshold that I'm just now trying to label is okay. I just did a very big mistake. Yeah, I was thinking I was doing the other block itself. So this is it. So this is the main threshold of that other block. So if price exceed this week, like if it wants to throw, I'm not saying price just, it's the bodies that I'm looking at. But for the weeks, it can go as far as 26,800. Okay, and this is the opening price here. If body even close at the open price, is even better. So I spent so much time here. I told you the inversion favor lookup, this like the last line of defense for high probability sell side. And if this is a really, are you real, bro? Remember, I was looking at that analogy. Are you for real? So if that's like, it shouldn't come here again for real. Like if it's a really strong bearish immediate rebalance. So there's not much to talk about here on the 1 hour time frame. This is the week I just outlined now. I don't like that price line. It's annoying me. Okay. And these are levels I don't want to get a price to. This low can come in, okay, but this level no. But I'm allowing for that on a condition which I said it should do what? Immediately reject to the downside. So I told you my draw liquidity. I told you this level you should anticipate body closures here on the 4-hour and daily time frame. If it does that, then there's a high probability for a sell side delivery because it's the 75, that's the lower 25% of the projection swing. And this was how last week was. This was Monday, this was Sunday, Friday. So this was how last week was. We haven't seen Sunday opening yet. And I told you people that I don't like this pattern, that it's very suspicious. Look at it. I told you this is a phantom trend line, and I call this level as sell side liquidity. That relatively close. I called it as sell side liquidity for you. It was, check that video before this one is there. I said we'll be retracing into premium, and I said we didn't get that retracement. So you can even see something like that happen. So don't demand that all those premium get. No, it might not do that. Be flexible with price, and it might do that because we'll fall lower strongly, and price might want to retrace or even have some short, not large, just little range candles. But I told you this pattern that is very suspicious. I say I don't like this pattern. It's very what? Suspicious, which means price is going to come lower and take the sell side liquidity below there. And this inefficiency, I told you what we'll be looking at. And price open on Sunday, on Monday, you can see that it's completely. So those will say, okay, this is a diagonal support. So if price should touch it here, price should touch it about here. So we'll buy long, and no, that's a flawed logic. I was taught that, and it was a weakness, and I turned it to a strength. So once I see that, even if I'm trading, once I see this kind of pattern, I love, because price will run there, the sell side liquidity below the low, there, 1.283, whatever. It will eat them up. It will want to cannibalize them. So since we've used the level, I delete it to make my chart clean enough. And this white level, this is a new week opening gap. So there's so many reasons why we should not see too much of a premium retracement. Like we've done so much. So, but I'm still giving it allowance. Don't be surprised. We can go down and still have an up close candle on a weekly for this coming week. I'm giving an allowance for that. This week can decide to just be okay. I'll be an up close candle because look, literally, look. Let me just toss that in. We've been going up for how many days? 6 days. 1, 2, 3, 4, 5, 6. So we can see an up close candle that might even retrace into this inefficiency. So these are the factors that will make you know that okay, this will be up close week. I'm not saying it must be like, okay, this will be a retracement. We may see premium. If all this fails, then premium will be a draw. But if they stay intact, sell side. But long term, then my long term objective, I'm bearish. But price can look at that now. It's so obvious. So much of down close candle. So much. Look at this. How many consecutively since September? Down, 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 down. This was what? Is this up? The opening price is 195. Closing price. Okay, I think not this. This also is a down close candle. So 1, 2, 3, 4, 5, 6, 7. Almost 2 weeks down close. So it's very reasonable to see an up close candle this week. Best of the best, it can come here. I'll do the same thing. That 50% of the week's range, you will see the opportunity of me doing it with you here. I'll divide this by 2. This is how I get 50% of the week range. I explain it, but for those who don't get it, then after I put my fee by confirm, the high is 261, the low is 973. So I set my fee, the high 261, and the low is what's that? I mistake again. High is 261, low is 973. 973. 73. So that's the midpoint of that 50% of last week's range is at 1.26, 1.27617. So this is the 50% of previous week's range, which means above that level is premium 617, 617, 617, 17, no, 17. So this is the same thing I did on that European dollar. I saved you this stress. That's to make the video shorter, but I just have to do it here. 50% of 50% previous week's range. So that's the 50% previous. That is, above there is premium and below there is discount. At there is equilibrium. So you can see that level with this. So if price is going to up close candle, it should just, this should be ideal. Then it can remain an up close candle. Next week we open. This will now form a CB. We might enter the CB and then continue lower. So that's something that can actually happen. Don't just, oh, it's going down. It's possible we can have that kind of a retracement. So that's the 50% level. But I've told you reasons and things that should not happen. And if it happens, then what will happen? We'll be getting that deep retracement. I told you this low. If it's a real immediate balance on the weekly time frame, I told you. If it's a real, okay, sorry, here on daily time frame. Somebody's looking, okay, yes, it's on daily time frame. No much confusion, please. So this immediate balance, this low here. I say if it's a real, if it's a real, come on. Okay. I say if it's a real immediate balance, it shouldn't get overcome. So if it gets overcome, I already told you, then you might be seeing this premium, this inefficiencies here, and we might have an up close week. So that's my thoughts, and that's all for Forex. I told you my drawn liquidity, look at them. Your sell side liquidity here, let me talk about that. So it's a daily sell side liquidity, 1.24461. Sell side liquidity daily, monthly sell side liquidity. So this, once I'm satisfied, it can obviously go lower. There's a red line somewhere. Did I have it here? Yes, here. That's 6 month macro. So I went to the 6 month time frame. So not just 3 months now again. I go to, like I told you, I went to the 12 month even to do this analysis. So we'll do a macro analysis. So this 6 month time frame drawn liquidity, it's something we might see. We might not see this year, but going 25, if we continue lower, it can be a drawn liquidity. So it's something I'm watching. And I mean, that's how we've been calling it. So I'll be telling you reasons that can validate or invalidate this one getting drawn to. And this is a both yearly. If you check on the 12 month, I won't do that. Do your research. At least you should do some homework. So on the 12 month time frame and the 6 month time frame, this is the midpoint of this tail. I've showed you how to draw a weak consequent encroachment. This is a tail consequent encroachment. So I'll be constantly referring to this level. If we continue bearish come 2025, it's a determinant. If a monthly candle closes well below here, then its low at 1.03437 will be a draw. So this is the low here. OHLC here, low at 1.20841. So did I make it right? Oh, maybe I didn't make it right. But I said it 12 months. Now I want to check that. Do your homework. So what I'm just saying, if this gets overlapped, then we're coming to the sell side. I'll be coming for a deep discount. So that's that for that. Let me see. Okay, so that's that for that. And also within this macro sell side round liquidity, look like there's an inefficiency there. Look like so it further increases the high probability for this place to be drawn liquidity for a long time perspective. So if you're a swing trader now, I want to trade for some weeks, you want to trade for 4 weeks. So if you see a good retracement premium, then you might want to target this sell side, this inefficiency. So that's it for swings. But for intraday and all those volatility, you focus on this easy, like close proximity. This is also long. You can use it as a swing trade. But if you want to be position trade, so I think that's the correction. Position trading, you might want to see this low here and also this low here. And I don't know if this low down, but let's keep our focus narrowed down here. Here on the dollar index, and the video before this one, I also talked about this premium drawn liquidity. And sorry, it's something here. Yes, this high. I made it blow, I think, on this video. So it was traded to. So since that was traded to, the next I'm looking at 1.07348 as a drawn liquidity, coupled with this inefficiency here, this CB, this monthly CB, the consequent encroachment. So what I said something about the consequent encroachment. So the monthly premium CB, an overlapping of its consequent encroachment is a plus for buy side delivery, which means if its consequent encroachment gets overlaid by a body, then we might have a sustained buy side delivery. But just for this week, and let's see, we'll be coming here. But there's something very important I want to show on the lower time frame. There's a probability for us to see a retracement here. A very high probability. This look more like the European dollar. They are having more of, they work like inversely to each other. If this one goes up, European dollar will just down. It goes down. This goes left, European dollar, like it's like what's an opposite. So this high, I'm looking at it for a potential immediate rebalance. It's high at 105.441. That high might be immediate rebalance. Let me look at what I said about it. Weekly bullish, what immediate rebalance, plus is bullish. Now there's a level here which I'll be going to now. So price might want to retrace so deep to this level. That's why I say you might see an up close week on the Forex, that's the currency pairs, on those two pairs I talked about, and also here you might see a down close candle for the week. So this level was what I called before this week open. I want to see how price reacts here, and you can look at how price took off as we came to this down close candle. We went a little bit below that into this inefficiency, and this inefficiency has been spoken long time, like so long time. I won't talk about it again. Watch my previous video if you want to know about it. So I'll be taking out this level out. That inefficiency was an order flow determinant, and I said if it gets overlapped, you can read it for yourself, screenshot it, read it. So let me just stay video. So yes, anybody who wants to read here can easily be reading, but I think you should be more focused on what I'm talking about here. I'm taking it out. It's annoying my eye. So here, obviously you can rewind the video and read it and understand what I want to talk about. I've spoken so much, it's on all my videos. This down close candle, this is the real order block, because it has a favorable gap which is changing state of delivery. But this is one down close candle that will have a reaction. Now this down close candle, what did I say about it? Okay, I didn't say much, but it's the high at 105.252. This 251 should be 252, or is it this time frame I use? Let me see if it's not. It is. That's the time frame I used. So I'm going back to it. So the high at 1.252. Let me just correct it. I won't be doing much here because I don't think anybody trades this. So that high, but we use that as a confluence. That's what I use for my. I want to talk about the relative trend analysis. I have a video on that on this channel. Go look for it. I spoke about it rather. So that's the plastic chair making a sound if you hear that. Sorry. The high there, it's price might want to retrace to this immediate rebalance, So how far beyond? Because it's not just going to touch it, and well, it might go a little bit deep because this is a weekly immediate rebalance. So it might go more deeper than just a normal 15 minutes immediate rebalance, 1 minute immediate rebalance. This other block here at 105.252 might go there. Then the midpoint. If this fails, there's an inefficiency here. Let me see. That's the benefit of outlining level. So I think I'm watching this inefficiency. I don't know, is it on visible on the late time frame? Okay, it might be a weekly array. If it's not, then I'll take it out. Okay, this CB now, it becomes a what? A bullish inversion fair value gap, which means it should act as support to send price higher. So this is a weekly bullish inversion fair value gap. So it should act as a support to send price higher. That's what it is. This is a CB that was overlapped. Now, this immediate rebalance, if it fails, like if this immediate rebalance fails, this should stop it. If it fails, then this is not immediate rebalance. We might be coming here. If this fails, then obviously this fair value gap, this other block, last line of defense. If it fails, well, we're coming inside this place to come on, attack the sell side here. But you see here, should stop price 1, 2. If it doesn't here, like this is like a last line of defense. Well, for high probability buy side, but for just low probability buy side, this is the last line of defense, the real one. Then price should go here. If this fails, this other block, main threshold, this PC, this sell side liquidity, if it fails, then we're coming down. But to me, this should be okay for a high probability. So this range retracement is enough for me. It's even beyond 50% of last week's range. So if we come in here, it's enough for me. So you can see I went up. I think this high is 705. This low is 718. That was not immediate rebalance. It wasn't. If it was, I would have just used it. So that's that for that. There's a fair value gap here. We trade into it. Or my retrace dip, but I've told you the premium during the day. For the Nasdaq, I didn't speak much about it. I told you once a higher time frame gets taken out. I said it. Check the video. I won't be doing the same I did. Once a higher time frame level gets reached to, which was this liquidity we've been saying, this buy side of is so like look at it, quarterly what buy side drawn liquidity. So it's been something I've been saying for a long time. It's not. I didn't say it because I don't touch much on the indices. I just do a very quick brushing like I'll do again. But this level I see it. So if a higher time frame level gets fulfilled, what do you want to see? A consolidation or a retracement? On rare cases, you see a continuation, but most times a consolidation or retracement. I tried last week with consolidating and we trace here. I knew we'll be coming here. Why? Oh no, you just after the fact. Yes, this was something I did personally, so you can call it after the fact. You can say it if you will, but it's something I did personally. But if you've been following this channel, you will know that we can do this all the time. Like it's very possible we can do all this very well because you've seen I have core levels and that's delivered. So whether you believe me or not, it's your problem. Deal with it. So I want to show you something I've not talked about here on this channel. It's the regular trading hours and the electronic trading hours. There are some gaps there that I saw, which is what I want to explain why I was anticipating price to come in here. So I was watching this, I think about early last week, probably about Monday. I can't remember specifically. But I was watching that level. Price was still up here. So I saw this. This is new week opening. I'm sorry. These are opening range gaps. The 9:30 opening bell. Differences between that's just it. It's like every day, Thursday, Friday. So open here, we jumped here. Open. So I looked at this level. This is a void level. Look here, it's a void level. Look here, it's a void level. Zero price delivery here on the regular trading hours. This is a void here, which is is void of liquidity. That's a liquidity void. Opening range gap, opening range gap, opening range gap, opening range gap. It's so much. So I was watching. Price should want to draw into it. Plus, this is an inefficiency here. This is inefficiency. What I say about that? It was initially premium. It's no more premium now. It's just a normal inefficiency. It's just a weekly CB. So let's always be on track. This is the longest time I've ever spent on the indices. So this is the CB. So I was watching that price wants to draw it. Like it comes in here. So now that price has come in here back to the electronic trading hours. So that's how you can do the setting. You just long press on here and you do it here. Price has retraced. This is enough of discount for me. Enough. Going to the daily time frame. If this inefficiency fails to keep price higher, it should really. Why? Look at this down close candle. This is an order block, not this, not the last down close candle before the up move. You can see this candle. The low here is 20,013. The low of this candle is 20,008.26.50. It's lower than this one. So this one encapsulates this one. This two down close candle is like the mother of this one. So the mother should be more superior than the child normally. So this is the real down close candle because it has a change in state of delivery here. So I'm looking at this as a down close candle, up displacement, retracement into BC. This low should not be taken out for high probability. The low of this low at 20,323.50. Okay, this should not be taken out. So it can actually, but for high probability it should be intact. But if it gets taken out, it should be like a sell side. Then we should go up. This looks like a phantom trend line, but it should stay intact for a continuation for buy side. Okay, if this inefficiency, this one here, should I take your mind off here since it's on the weekly time frame? Let me just for a while. This BC here, this inefficiency here, I don't want to now draw the video is long enough. This inefficiency here, it should act as what? A BC, as a support to send price higher. If it gets overlapped to the downside, that inefficiency, if price overlaps it to the downside, this inefficiency, if price overlaps it to the downside, okay, if price do that, then it will become like, okay, this sell side might be repriced too. So now if price overlaps it, is there an up close candle inside? Would it retrace into it and act as an order block, bearish one, to send it lower? Or would it still keep going higher? You watch the consequential encroachment, you watch levels in there, and that's how you know. So there's not much upper. So if it even want to, it might retrace so deep. So if we retrace so deep here and we still keep going lower, we might retrace so deep here after closing below it. But I don't want it to close below it. No, it shouldn't. For high probability buy side delivery continuation, it will just act as a normal traditional BC. If you ever look up and send price higher, consequent encroachment order block, we should keep going higher. But if we fall lower, then this sell side, it will overlap it. It might come in for a deep retracement, or just keep running lower. This sell side here, 20,017. All these lows are too suspicious. Like, look at that, like a trend line. No, I don't like that. So it might do that, and this low sell side here. But for now, if you're asking me, okay, tell me what, okay, now you must tell me, okay, buy side. That's what I'm looking for. Buy side. Why? This is a CB. This is a BC, sorry. This is the order block. So, but why would I not be buy side again? If this gets overlapped, treat it as an inversion, bearish inversion favorable gap, sell side is coming down. But I'm bullish. So buy side draw liquidity is what? This high at 20,340.2 point 20,340 and 76. So 20,340 and 76. So that's the next buy side draw liquidity. If everything stays intact, that will be the next buy side draw liquidity. So we'll lock in visibility all intervals. This has been used, so I just make it blur. There you go. So on the weekly time frame, this is how it looks like. So that's the next buy side draw liquidity for me. We've used this already. So if this BC and everything just decide to fail for whatever reason, this was something I'd used already. See, I've plenty unnecessarily long time here. So that's just my buy side liquidity for the Nasdaq and for the ES. ES is in an all-time high, just like Nasdaq. This I'll be looking at it as the potential immediate rebalance. You can see that touches it. So the next candle I'll be expecting to rally up. I'm giving an allowance for it to run below this low, but still rally up to target the high. I'm bullish on both of them. Unless if that's on the Nasdaq, you can see it's very similar structure. This is like a balanced price range, but this is too close candle. These two, if it had been up close, I would have used as the balanced price range. But you can still use the framework. So I can just I won't draw that. You can draw a rectangle from here to here. Look at the midpoint. It should be important for price. It So using this lowest low here and this high here, look at that. So the midpoint right here is important. That midpoint is below that low of the weekly, so it might go down in the end, keep going higher too. Drawn liquidity is 6,053.25. So that's the drawn liquidity for the ES, 6,053.25. That's it for ES. So hopefully you find this video impactful, and I wish you all a great trading week ahead. So 54 point, is it 54 53? I think it's 53. Yes, so that's the buy side for the listing, the Emini S P. So that's that for this video, and I think I've done justice. So looking at the week, if there's FOMC, you can check the economic calendar on your own. I'll do that. Then you might see some retracement and whatever. FOMC is just, you shouldn't trade ahead of FOMC, straight after FOMC. Drop your comments, your questions, subscribe, and have a great trading week ahead.